What's going on, everybody? This is Brandon Lamar Jackson, and I am your legacy advisor. And today I'm going to be talking about the difference between term insurance and permanent insurance. And as a agent and broker, oftentimes I'm asked which is better. And really, the simple answer to that question is that neither one is necessarily better. They both serve a purpose for wherever you are in your financial plan and planning at that given time. So, let's just really get right into it. Term insurance is basically a contract that you have with the insurance company that gives you a certain amount of coverage for a certain time frame. And generally that time frame can range anywhere from 10 to 30 years. So in that 10 to 30 years, you're going to be guaranteed a certain amount of coverage. And then after that time is up, then you no longer have that plan and you may have to reapply for insurance. You can also, in most cases, transition your term insurance policy to a permanent policy. But one of the most important reasons why you want to have term insurance, people like term insurance, is its affordability. You can get a large amount of income. Large amount of death benefit and income protection for a relatively affordable amount. So if I'm just using myself as an example, I currently have a 20-year term policy that is worth that's $750,000, and I pay about $40 a month for it. The reason why that's important for me and my lifestyle at this time is income protection. So, as many of you may know, I have 3 children that I provide for. So it's important that I have income protection in the event that I have an untimely death. I need to make sure that my family is able to live the same lifestyle that they've been accustomed to living, or better in the event that I have a untimely death. And typically you want to have 10 to 20 times your income in this type of policy. So if you make $50,000 a year, you'll want to have a $500,000 term policy. Another good reason to have a term policy is living benefits, which a lot of people don't know about. Living benefits has been around for a long time, but oftentimes, for whatever reason, people don't even know about living benefits, or even if they have living benefits. Living benefits are really vital because it's another way for you to utilize your term policy. If you have a term policy and don't have living benefits, it's almost like only having 50% of the value that your term policy can actually bring you. Living benefits kick in and can be paid out to you. The death benefit can be paid out to you while you're living if you get critically or chronically sick or terminally ill. So if you get sick, you can get paid out from the death benefit while you're living. Again, it also helps with income protection. It could be medical bills if you get sick. If you're laid off from your job because you got sick and wasn't able to work, you can tap into your death benefit while you're still living. That's really important. So 10 to 30 years is going to be the contract. Income protection, living benefits, and affordability is what's important when it comes to a term policy. Now, as we go to a permanent policy is going to last you for your lifetime. So permanent contracts go up to age 121 years old. So obviously that's going to cover essentially everybody that has a permanent policy. You're able to have that insurance guaranteed to you as long as you're making the premiums to be paid out once you pass away. The main difference between term and permanent insurance is that the permanent insurance has what's called a cash value account, where a portion of the premium that you pay goes into a savings account essentially, and And in most cases, that the permanent insurance that I use is that you can get a guaranteed interest rate on your money when you have that cash value account, having a permanent policy. So a portion of your premium goes to the cost of insurance. Then another portion of your premium goes to the cash value account, aka a savings account. One of the nice things about this savings account and just the permanent insurance in general is the tax benefits. You can access the money tax free, and it accrues and grows in interest tax deferred. And then lastly, the reason why you want to have permanent insurance is to create the generational wealth. Having this permanent policy, we feel is one of the easiest and simplest ways that you can guarantee generational wealth in your family. It's going to be able to leave a tax-free lump sum of cash to your family once you're no longer here, and that's passed down to your heirs tax-free. So that's really just a quick difference between term and permanent insurance. Like I said, one is not better than the other. I personally have both. It really depends on where you're at in your life, what do you need, and what you can really afford to be able to continue to pay consistently at that time. So hopefully this video helps you understand the difference between term insurance and permanent insurance. I'll be covering this in more detail with some other videos coming up soon.